Good afternoon and welcome to this particular session here at the Debate Circle, a one-in-a-kind session where we're joined live in studio with a guest audience. We're absolutely delighted to have you with us. To those who are watching from wherever it is you're watching, from home, from the office, or from Nairobi traffic, we're not particularly picky. Thank you for joining us for this particular discussion. Today in studio, I am joined by a guest. I'll allow him to introduce himself.
So, good afternoon, everyone. My name is John Kirawo. I currently work as a graduate assistant at the Strathmore Law School. I am also a student by profession. I'm currently taking my KSL classes at the Kenya School of Law, and I'm happy to be here.
We're glad to have you with us today. So today the conversation, as we had said before, is basically about the budget and matters finance. So these are things that we are well aware about. Every single year in June, you are informed of how much money we need as a country, how we are going to get it, and how we are going to spend it, be it healthcare, be it corruption. Yeah, very many ways we're going to spend it. So ideally, John, you are also very well conversant with such matters, having dealt with tax for quite a bit of time. Right, so our budget for this year was 3.6 trillion. It's one of the highest ever budgets we've ever had. And I think we've set a trend as a country of a budget that continuously increases. Is this something that we should be comfortable about? Is it something that we should be concerned about as Kenyans? What do you think?
So I think the question of whether or not the budget constantly increasing is not particularly a bad thing, at least not to me. Mm-hmm. I think the biggest question, and I think maybe the real question is then how do we finance our growing recurrent expenditures? And I think that is the most problematic part, I guess, of your question. Mm-hmm. So to me, the budget increasing every single year is not a particularly bad thing. Mm-hmm. The question is then how do we finance it? And I think,
I think, allow me to interrupt you there, just quickly. Yeah? In as much as we'd want to purport that the budget increasing should not be a big deal, do you feel like the exponential increments that we are seeing to go from, say, for example, 2.3 trillion shillings 2016-17 to now we're in 2020-21 to 3.6 trillion shillings, do you not feel like that exponential increase should be a matter of concern, especially if it's not a development-backed budget?
I mean, once again, I don't think it's problematic. I mean, the growth itself is not actually problematic. The question is how do we finance, that growth? And I think for me, that's where the real question is. How are we going to finance the 3.6 trillion that we are going to spend in the next 1 year?
Okay, so you have chosen a hill to die on. You've said it's okay. Let us have the largest budget in not just Kenya but in the region, East African region. Okay, let's move by that. So how are we going to finance it? 1.4 trillion. 1.4 trillion is going to be financed by tax, from taxpayers, from our pockets. Do you feel like the trajectory we're setting is one of overtaxation? Already as it is, we're dealing with COVID, people have lost their jobs. So ideally, some of the largest bases for tax and tax remittance have been affected, and yet we still want to place an unfair burden of 1.4 trillion. Let me not brand it an unfair burden of 1.4 trillion. Do you feel like we're slowly getting to the point where we need to discuss overburdening the Kenyan mwananchi with tax?
I mean, it's certainly true that, and I guess a plausible argument can be made about overtaxation. Mm-hmm. And I think for me, the real question about how we are going to finance these things, and importantly, how we are going to, I guess, when it comes to taxation, it's really about who is paying what taxes. Mm-hmm. And I think for me, that's the biggest challenge we see with the way the current tax system is working, because we have a certain chunk of people who then shoulder a lot of the tax liability, which is, I think, not only dangerous in and of itself, but it's also a cause for worry, because that's the very nature of overtaxation, Okay. So perhaps here one of the questions I think as a country we need to be thinking about is how do we include the rest of the population in this? And maybe also one of the things we should begin thinking about is how do we, and I guess this is a term that people throw out there, how do we expand the base? Yes. And I think for me, when it comes to a fiscal point, rather fiscal planning point of view, I think this is one of the challenges. I think, or rather one of the flaws that I could reasonably point against the government, because I can't say for sure that in Kenya we've not had what I would call a tax gap analysis, which is really a study about who is in the country and how do we include them into you know, the tax bracket, quote unquote.
So basically, you have a small number of regular people shouldering a consistently growing tax burden. Right, that's interesting. Now, while we get to what exactly we need and how much exactly we need, now there's the element of how to finance it. We're now introduced the element of taxes. Of course, we have a continuing tax regime, one that has been there for a while, but every single year we see the twin of the budget, the finance bill. Yeah, the introduction of taxes, the removal of taxes, basically a couple of things in between that happen in the finance bill, and a lot of them are usually controversial. So let's talk about the one for this year, yeah? But before we go there, let's talk about basic tax principles. I like that you've mentioned that in our country there's things we've not done. So I think one of the things is to understand what our basic tax principles are. From the most simplistic perspective, what are the basic tax principles?
So when we speak about this idea of tax principles, and I guess scholars in this field will tell you that we have a ton of principles. But for me, I think when it comes from a tax perspective, the most basic principles I would say are three.
Yeah.
Certainty, equality, and proportionality.
Okay.
When we speak about this idea of certainty, we are talking about the fact that a tax system, or rather as a taxpayer, you should know the kind of tax liability that will accrue to you, and you should know at what point that tax liability is going to accrue to you.
Yeah.
When it comes to a question of proportionality, we're basically saying that you should pay, you should shoulder a tax burden that is proportionate to the amount of money you're making. So ideally, the rich should pay more. I guess the poorer should pay less. And then to the last principle of equity, again, this is also that very idea, you know, that the people who have the most should pay the most taxes. And these three principles, I think, to me, work together. Work together in tandem. You know, a tax system that is proportionate is also equitable in some sense.
And that is also certain.
And it's also certain in that respect. So I think for me, those are some of the basic tax principles that I think we should be thinking about when we're having a discussion on tax.
I'm glad that you've mentioned them because it raises a couple of questions in terms of the idea of being proportionate. Yeah? When you think about how much as Kenyans we pay as tax, yeah, and the introduction of tax being that it was not supposed to, from the initiation, create some significant dents. It was supposed to just marginally affect the consumer, you know, expenditure. Do you feel like that's exactly what's happening currently? Because with all the things that we're seeing and the constantly changing dynamics of tax, and you being asked questions like, what is your contribution to the government? Do you feel like we have fully internalized exactly how a sober tax regime is supposed to work?
Wow, that's a packed question. I'll answer it in two ways. I mean, whether or not we have internalized how a proper tax system would work, I don't know. I mean, I think this is one of the questions that I think Treasury has really not addressed us on. And maybe I should go back to this idea of certainty tax. You know, the very idea that that tax liability should be predictable.
Yes.
And one of the things that you will notice about the way tax legislation happens in this country, it's very unpredictable, so to speak.
Yes.
And the reason I say that it is very unpredictable is because every other time the finance bill comes out, we see, you know, new taxes being introduced, some being taken out. When we speak about the list of VAT, so when we speak about the exemption list, we see things going in and out, and no one puts a lot of effort to explain to us why things are the way they are.
Yes.
So if you'll notice that in very advanced jurisdictions, especially when it comes to tax legislation, you'll notice that they do this thing that I would call, for lack of a better word, a tax policy. And I think the tax experts here in Kenya have always been, you know, telling Treasury, you know, that give us a tax policy, you know, tell us at least for the next financial year, you know, what are you looking to tax, you know? And this, I guess, goes back to also what I was saying, you know, that tax legislation in this country, as I see it, is not data-driven. I think it's one of those things that I think Treasury sometimes wakes up and decides, okay, we're just going to tax this. But I don't see a lot of effort taken to, number one, tell us, why we are taxing that, that specific, or why we're taxing, in that specific way. And then we also don't see the data informing the tax, So if we, for example, want to introduce, for example, a digital service tax, where is the data telling us that this is the amount we raise, these are the kind of people we'll capture? And for me, when I think about it that way, I wonder whether the tax system should be working as it should be. But then again, I should be quick to note that I think the tax system here in Kenya has really come from a very long way.
Granted, it has. We can make arguments such that we, of course, acknowledge how far it has come from. But I think in the moment when you are paying X amount, and your consumption, or rather your daily spend, is being affected by how much tax you're paying, I think then at that point we need to really discuss the specifics of what we have now. That we will celebrate the history, but in the moment what is affecting us is this. And so yeah, I like that you've mentioned the idea of it being data driven. So the idea that we don't just wake up and introduce tax policies, that there needs to be some sort of data informing us and letting us know as taxpayers whose money is being used, certain things about the same tax. So let's think about it this way. From where you sit, do you feel like we have a problem with expanding the tax base? Do you think that our problem is going to be solved by expanding the tax base, or do you think that we have a problem of utilization? Of course, that is rather hard in the absence of data, but then again, from where you sit, what do you think, having interacted with some of these policies for a while?
I would say those are two separate questions. Whether or not we have a problem with how we spend our money, I would say from a very subjective point of view, I think a lot more could be done on that front. It is true, and I think the president did say this, that we are losing about 2 billion shillings per day, almost every single day, which I think is admitting that in the public is quite, and even for us who are young people who are just joining the tax brackets and stuff, it's also worrying that
that you're paying this much tax,
to a kitty that every single day we can't account for 2 billion. So in that sense, I think the system could work better at the spending front. Now, at the collection front, again, I will go back and say that expansion of the tax base is something I think we really need to do. And one of the things that I think I will give the government, and to an extension the Treasury, I think is that they have really done a lot on that front. Or at least I can say that they are really doing a lot for the purposes of trying to expand the tax base.
But to what end? To what end, John, do we expand tax bases, especially when we are having monies that we cannot account for? Do you really mean to tell me that we shall continue with this continuous effort of expanding tax bases every other time? When you're losing 2 billion shillings, I mean, how much do we stand to gain from digital service tax? Is it money that we would have otherwise gotten had we just plugged the leaks?
I mean, it's certainly true, and I think, I'm just going to go back to what I think I initially said. I think those are two separate questions, and I guess you can't deal with them together. I mean, at the spending point, I think we have quite a bit of challenges, and I dare say they are fundamental in how we spend the money we make. But at the collection front, I think a lot has been done, and I think there's still a lot to be done. I mean, that's not something we can take away from Treasury. I think a lot has been done, and a lot can still be done, but I think it's quite important to expand that tax base.
All right. For those who are just joining us, this is a conversation around the budget and the Finance Bill 2021. Welcome to this particular session. So we are joined by a live audience, and I'd like to hear what you guys have to say about the sentiments that John has just put forth today. So he's chosen the idea that at the end of the day, it doesn't matter how large the budget is, it shall continue to expand, and that is perfectly fine. I'd like to hear what you guys think about that idea, because that is the hill he has chosen to die on.
Normally, I have this question that's usually asked, so what do you do for a living? And I have a joke where I usually say I'm an unemployed Kenyan youth. Now, to further echo that, I think it's noble that we can have a discussion around the tax base and the budget systems that we currently have in the country. But one of the key things that we fail to understand is in a country where civic education is not a common thing, the budget is such a far-fetched idea.
Yeah.
So we can sit here and talk about how, yes, we should expand the tax base and things of that nature, but your everyday citizen doesn't even understand what role does the budget play in their life.
Yes.
So I think maybe just to draw us back into how best can the government ensure that we talk about civic education for the for a tax base or a tax regime or even a tax policy. Now, the reason why I started with I am an unemployed Kenyan youth is from where I'm sitting, it makes no logical sense why we should expand that tax base, bearing in mind that we have a government that vaguely, Yatani's budget vaguely talks about what he will do for the unemployed sector, and especially for people that are in the formal sector. He's pledging to allocate 20.5 billion to the manufacturing sector, which brings the question of, is everyone in the formal sector absorbed into that manufacturing system? So you see a lot of, as you said, collecting and things of that nature, but you don't understand on the grassroots level, how does that budget actually apply? And are we seeing a government that is serving its people through its budget, or ideally serving the people that gain at the end of every other day?
Yes.
I do have a lot of questions, but I will allow the rest to respond.
Hey, so I agree with the civic education thing, but my problem is mainly with corruption. You know, you want to expand the tax base, yet the basic problem of corruption is not done. Some might call this budget overambitious, and it's true, because the expenditure is one thing, but actually getting all of the revenue directed to what it is supposed to do is something totally different, especially when you're losing money or when you can't account for a lot of money. I mean, it's damning, it's scaring, because when you go, okay, I used to watch a lot of videos, you know, where, say, random people in the street, say, the UK or the US are asked by people, what do you know about Kenya? No, most of the people will say, no, the animals, the Maasai people, the culture. Others will say Obama. But, you know, nowadays, on that list, corruption is there. People abroad know Kenya is corrupt, and people don't want to give aid to Kenya because of that. And a big chunk of our expenditure is actually from public debt, the aid that they give us. So you have a country that is almost, whose name is almost synonymous with corruption.
So the idea that we can continue expanding tax bases, especially in the phase of corruption, becomes a really big concern. Yeah?
And it's so scary, because, you know, there is this list that came out, you know, the other day, and it was ranking the most corrupt African countries, and Kenya and Nigeria were not on that list. So the thing about this list is that most of the comments were from Kenyans and Nigerians defending, the corruptness of their country. And what's even scary is that, you know, those comments were very comical. They were like, no, we are the most corrupt. It's something that is embroiled in them, something they've decided to embrace, and that shouldn't be the case. You know, a news station in the States was broadcasting, you know, locusts and how locusts were invading the country. And one guy was particularly very bitter, and he said, you know, let those locusts in Kenya eat out the corruption. They are so corrupt. I once sent money as aid to Kenya, and they taxed me for my aid heavily. So the idea that, so basically I think we get to the idea of understanding that your concern as a Kenyan citizen is that there's, while of course we talk about expanding tax bases, you feel like there should be the conversation about corruption before we get into the conversation around expanding tax bases? Exactly. Sorting out corruption is primary for me. Then we can get to civic education and the rest. Thanks.
Thank you for having me. And I have some fundamental disagreements with some of the things that you said, but I also do agree with some of the things. And one thing that actually comes off as a problem to me is when we are talking about widening the tax base. For me, widening the tax base is just a euphemism for overtaxation. It's just a rosy way of telling us it's overtaxation, because when I think of widening the tax base, you need to also, for people to have even the urge to pay taxes, I think it's important for them to see that it is actually happening to them. And for me, I also do have a fundamental problem with the way we have actually organized our budgeting and taxation policy. You realize that the budget that was read just the other day, it came before even the Kenya National Bureau of Statistics could release its economic survey report. And you also find that some of the things that should have been followed, some of the things that say can inform a citizen, were not done. So I do have a problem with that. Now that's on the budgeting aspect. If you come to taxation in and of itself, you find that the taxation is very chaotic. You cannot understand, and that's where I agree with you, that you cannot understand what is driving the tax policies that have been made. Now, before I lose my train of thought, I think we need to actually consider that even as the government goes into taxation and trying to collect as much tax as possible, I think there is an economic wisdom that maybe we did not have it in 2013, 2014, 2015, is that debt for today is tomorrow's taxes. And I think it's when we are learning our lesson right now. But that, but that as it be may, I'm actually saddened that we are actually crippling production, because production is the source of our taxes. But you look at the taxation policy, it is actually hurting production the most. And I think that is where there is a problem.
Where there is a problem. All right. Thank you for those sentiments. Now, very quickly, I'm going to let's just go over some of the questions that have been raised. So the idea of civic education, we have little to no civic education. So your common mwananchi on the ground has yet to understand, why should I be interested in the budget? That yes, there's a conversation on TDC. Even those who are part of the Wokerati generation, really don't understand how exactly the budget affects them, and their general disinterest has to be based off of that. So what do you feel like we're doing to remedy that situation? And then perhaps the idea that corruption has been raised as a very significant point. And perhaps in relation to the tax base and expansion, and how you feel like they're two different questions. I think the question, underlying factor here is quite simply, do you not feel like the more that we fail to deal with corruption, as much as we'd want to part this two, the idea of utilization versus expansion of the tax base, do you not feel like whenever we are having significant leakages, then we're going to get to situations where we are over-expanding the tax base to accommodate our wastage or our wasteful spending? And then, of course, there's the idea that has been brought up, the idea that we do not see exactly what the tax that we pay goes to. So even when you talk about expanding tax bases, nobody really feels, because when we talk about overtaxation, there's countries that have a 60-40 in their income, where 60% is skewed in favor of tax. But they really would not be in situations where Kenya finds itself, because you're seeing some level of development, that you can go to a public hospital, a public school, and all of those things are top notch. Yeah? So whatever you're left to spend is okay to just be there for, just because you've worked. So ideally, do you not feel like there is a problem with exactly how we expand our tax bases, especially since we do not invest in the things that tax should go to?
Yeah, so thank you so much, both for your questions and the reactions from the floor. Interesting questions you raise. So on the first one, on this idea of civic education, I mean, that's not something I think I can disagree with, and that's not something we can run away from. I think, and you are correct, I think a lot more needs to be done at that front. And for a long time, I used to think perhaps the government couldn't do this, but if COVID has taught us anything, at least me, is that the government actually has power to communicate.
Yes.
And it's not only about, I think, the civic education. I think this data, I guess data and these big ideas, they need to be broken down in ways I think the common mwananchi can understand.
Yeah.
And I think for me, that's also a big flaw that I could put to the government. That I feel like I also agree that no much effort has been put to, to breaking down these points in a way that, normal people can understand. Just the other day, I saw a comment on a YouTube video done by KRA, and the person was sort of lamenting that, even I, a graduate of some university, let me not mention it, I didn't follow the process, so how is somebody else supposed to do it? And for sure, that's one of the things that I think the government should do. And this, I guess, leads into the second comment that Kenyans don't really understand why tax, is important. And I think for me, this is also a question of how inclusive is this idea, or how inclusive are the shared goals and dreams, you know? And I think maybe again, perhaps a popular initiative needs to come out here, where I guess people go out there and, you know, we have actually candid conversations as to why we need to, you know, be included, you know, in the debates about tax, and also why we need to be included in the tax base, as we are calling it. Because I think this idea on how we tax and how we spend is not something I think Kenyans have come to own. And I think that lack of ownership is one of our biggest challenges. So and for me, I think perhaps this is why I think many people perhaps cannot like separate these two questions, like, you know, why should we get taxed versus, you know, how we spend the money, because this is not a dream and goal we have bought into. And I think for me, civic education is the first step, and then secondly, we need to buy into the goals and aspirations of the government. And if I just walk memory lane, and I think if you guys remember the popular initiative that Kibaki conducted around corruption, to such an extent that, you know, Kenyans started arresting, you know, cops themselves. That, you know, if you were, for example, in a matatu, and the cop demanded a bribe, I mean, the story is sometimes the passengers themselves would alight the mat and, you know, arrest the cop. And I think those are some of the benefits of having a shared goal and dream, you know, shared aspirations. And obviously it sounds very aspirational. And
it sounds very, everyone would buy into the whole idea until you walk into a public facility, a public health facility, and you cannot get services, or the doctor is not available, or your child is sent away from a public school because of not paying school fees. So the whole idea of having shared values and understanding a tax base could be reinforced if only tax was directed to the very thing. So in as much as...
But see, that's step number 3. I mean, Kenyans need to understand what the tax is, you know, and then they need to buy into this, you know, this shared dream of the country, of, I guess, being self-sustaining. And then if Kenyans, you know, buy into that dream, and if they understand how things are supposed to work, then whatever you're talking about then becomes step number 3. We'll then see the need, and we actually take proper steps to hold the government accountable. So it's, for me, they're not disjointed steps. It's one full circle, because people understand what tax is, and I guess the various facets of tax. People then, you know, buy into this idea, you know, buy into or have what you're calling common values. But for me, it's more like people buy into the aspirations of the country. And when they do that, then they begin to hold the country accountable. And when that happens, then civic education ensues, and then, you know, people continue to buy into...
Sounds very,
it sounds actually very
very
aspirational.
Yes.
I can't take that away from you. But then again, I would want to take you back to Kibaki's era and his popular initiative around corruption specifically. And if you remember how that worked, how it began, you know, it started with a conversation about the illegalities around corruption, you know. Then we had this whole things, we had a whole popular initiative, you know, that had a lot of cartoons, that had, you know, Wanjiko somewhere, that had, you know, things that Kenyans could understand. And I think from that point of view, Kenyans bought into, or Kenyans then shared this goal, you know, of eradicating corruption together with Kibaki. And then, what did they do?
Then the action was taken, and then
they held the government accountable.
Yes, we found ourselves.
So for me, it's one big circle. And I think, for me, that's how I think it should work.
Another circle that's important is not just what exactly we need, it's how we raise it, and that brings in the twin of the budget, the finance bill.
Yeah.
Now, in terms of civic education, the space you're going into is going to show you just how little civic education you have, yeah? So as comes to for the finance bill of this year, there's some few interesting things that have come up, for example, like in corporate tax. And I think we're just going to explore some of them for purposes of the people who are watching us today. So in terms of corporate income tax, there's what has been introduced as a minimum tax. Why should I, as someone who's going into a business, as we push for guys to be self-employed, as we push for people to start businesses, why should I be interested in minimum tax? And how is it being introduced now, especially in the wake of COVID? What are some of the circumstances around the minimum tax that make it a very inconvenient tax, in my opinion, to be introduced, especially now?
So the minimum tax. So the idea behind the minimum tax, at least from Treasury's perspective, is that we have a lot of companies here in Kenya that are making a ton of money, quote unquote, but are not paying any taxes. So how are they not paying any taxes, even though they're making, quote unquote, a ton of money? Is by inflation of the expenses. So if you guys know how, and I'm sure everyone knows how we get to this idea of profit. We take the income that we've made. So if we have sold goods and services, we say we have sold goods services for this month worth, say, 10 million, and then what were our expenses? We had rent, we paid Wi-Fi. Maybe it's, for example, if this was a company, you employed John, you probably bought him a good suit. And then after that, what do? We get the profit at the bottom.
Yeah.
So then
the profit
after the profit at the bottom,
taxed.
yes, that's what KRA comes to get a bite of,
Yes.
quote unquote. So the idea behind the minimum tax was that we have a ton of companies making a lot of income, inflating the expenses so that they don't pay any tax. So KRA, rather Treasury, then decides that to curb this, we are going to have a tax that is levied on the initial income itself. So the way they wanted to do this is they were going to levy a 1.5% on the gross income that you're making, you know. So the gross income they're talking about is the money before you deduct your expenses. And I think this is actually very problematic. I mean, for this one, I'm going to agree with you. Very problematic because we do have a lot of businesses that have high turnovers, but very little profits.
Yes.
And for this, we're talking, so I mean, think about your supermarket, your regular supermarket, which is going to be making maybe 2, 3, 4, 5 shillings in terms of profit,
Yes.
of the profit margin on the loaf of bread. So then asking them to pay 1.5 on the total value of the bread is inherently unfair. Because then what you're essentially saying is that is that, you know, you're not paying the tax on the profits itself.
You're paying
they're paying
tax on the
tax
cost.
on the cost of the good itself,
Yes.
which is not their money at all.
Ideally.
And then secondly, the reason why it's very problematic, and I think it's a good thing the High Court set it aside at the moment, is because what would most probably have happened is that goods and services would have increased by 1.5, by 1.5. The prices would have
Yes.
increased by 1.5. I mean,
In order to offset.
in order to offset, yes. So I mean, going back to the supermarket example, if I'm the owner of the supermarket, what am I going to do?
Transfer the cost.
I'm
quite
going to
simply.
transfer the cost to you, Stephanie.
Yes.
You know, so you know, I'm going to ask myself, why should I be paying 1.5? You know,
So
You pay the
basically, it's a
1.5.
very inconvenient tax system for the common Mwananchi, the people who are supposed to ideally be affected by the tax basis.
It is actually a very inconvenient. It is a very inconvenient tax system.
Don't you feel like that sets a precedent for, you know, like a tax system that needs to be revised?
I would not say having. Well, I would say that the tax system, we really need to do a bit more empirical research on the kind of tax system we have. That I cannot take away
Cannot
from you.
deny.
But going back to the minimum tax for a short minute, I would want to say that it was stopped by the High Court temporarily. I know that now KRA have already filed a suit at the Court of Appeal. The court should be sitting sometime very soon. I think as of last week, they got the go-ahead. Rather, the court gave a go-ahead of having these processes expedited. So we should hear about the fate of the minimum tax. But as we are sitting now, it's temporarily.
But don't you feel as if the basic fundamental principles and the trust we entrust in some of these institutions to carry things out, if you have to go contest some of these things in a court of law, then don't you feel like some of these principles have basically been violated before we get there? So ideally, we shouldn't have to argue or suspend clauses like minimum tax, or for example, the addition or removal of certain critical elements in VAT at the High Court, when it should be in the basic principles of tax, and these are things that should not happen.
I mean, Steph, you need to remember that the basic principles cannot cover everything, you know. the basic principles cannot instruct us as to, for example, how we are going to tax, this glass, or how are we going to tax, for example, the suit that I have on, or the specs. The basic principles are principles in nature. They are just supposed to be to offer guidance. So the nitty-gritties of the tax system itself is something that has to be legislated by Parliament itself, and this is their very mandate. So I think it's a good thing that we have the judiciary to counter as a check on what on what the legislature is doing.
Okay.
And I think, at least from where I'm sitting, this is the system working. The legislature.
It's arguable. It's arguable.
I mean, at least on this minimum tax. I mean, you could say that the system worked.
Okay.
Something that perhaps you would call inherently absurd, as other people have called the tax itself.
Extremely
and
inherent.
the court
Yes.
saying that you guys need to go to the drawing board.
All right. So now there's something that's very critical at this point: the idea of the interest limitation rule. Now, this might be a very far-fetched concept, but the idea is quite simply one of the questions that comes from here is: are we looking to make, of course, after you've explained what the interest limitation rule is and the transition from what we have now into the new system, are we looking to make access to business, or rather access to debt, expensive? First of all, the rule itself, what it states. And then perhaps what is the implication of that on people who are starting businesses, knowing that businesses are financed a lot by debt, by young people, of course, people who are trying to self-employ themselves. So what is the possible repercussions of the interest limitation rule?
Okay, so the thing we need to note about the interest limitation rule, it has come pursuant to another concept in tax that we call this idea of thin capitalization, and this is actually a good thing, Steph.
As long as we've understood what thin capitalization is,
Yes.
then we'll be able to make the judgment on whether or not it's a good thing.
So yes, so let's start with this idea of thin capitalization. When we speak about thin capitalization, we are talking about a corporate entity first and foremost, and we're talking about an entity that is trying to, quote unquote, evade taxes. So going back to the structure of
how
profit,
you arrive at the profit. Yes.
we begin with the income we've made, then we calculate our expenses, then we get profit.
Yes, and
then
then
from profit, KRA comes. Yeah. So again, at the expense part, one of our legitimate business expense
is the interest
is
interest
interest.
on repayment of debt.
Yes, interest itself. So you'll see that very many companies, well, let me not say very many companies, but companies sometimes will want to have a related entity give that company a loan. Why? Because as at the point when they're calculating the interest, remember, interest is a legitimate business expense,
yes.
which means that KRA allows you to deduct that expense before they
Take what they
before they arrive to the profit. So what is happening here is that this interest, the law is trying to limit, or the law has an incentive to limit the interest that you can deduct.
By limiting not necessarily by limiting the amount of debt that you can take, but by limiting exactly when it is expensed.
Yes.
Well, that might sound very nice, yeah? We are seeing a
Not
transition.
when it is expensed, the amount.
Oh, yes.
Yes.
So while that might sound very politically correct, then what then becomes the fate of people who would want to finance the business using debt? Because now you're going to see a transition of people who are going to move from financing the businesses using debt to financing businesses using the alternative, which is basically equity. Are we not seeing a place where we're going to jeopardize access to credit, of course, because now credit would either become more expensive or something along those lines? What happens in such situations?
So you need to know that, so in relation to the interest expense itself, the finance bill now puts it at 30% of earnings before
interest, tax, depreciation, and yes,
yes,
those are very
amortization.
very technical terms.
Very technical terms. And what we are saying here is that we are putting a cap on the interest. Sorry, we are talking about the earnings after you've subtracted things like depreciation. Depreciation is like the wear and tear on the kind of goods you have. We're talking about amortization, amortization we're talking about, for example, if it's like here now, maybe the software we're using today, tomorrow is going to be obsolete. And those are legitimate
expenses.
business expenses. So what we're saying is that we are going to look at that amount of money, you know, and if that amount of money is of a certain goes above a certain cap, then we're going to limit the amount of interest
That you can expense.
that you can deduct.
All
Now, and this is why I'm saying this is not exactly a bad thing in that sense. And maybe to understand why this is not a bad thing, we might want to go back to what was there before, which was a ratio of 3:1.
Yeah.
So a ratio of 3:1. So your interest, the interest you can deduct, cannot be more than 3 times the capital that you have. So I would say this is a good thing.
Well,
good
it sounds like
for us who are here at the bottom.
It looks like a good thing, but what about the introduction of the taxes on the provision for bad debts, especially for banks? So ideally, when you're taxing the provision for bad debts, basically the allowance of people not being able to pay back their loans, don't you feel like that makes access to credit so much harder for especially people who want to start businesses? Your typical Mwananchi is not going to be going to some equity or venture capital firm to get some input. They're going to go to your bank, your family bank, your KCB. So what happens when you put these banks in a position where you've introduced a tax on their provision for bad debts? Basically what they're not expecting to be paid back.
Yeah.
Are we not seeing that burden having to be transferred to other people when making it very difficult to access, or rather making it more complex to access very expensive debt then?
Yeah, and I think on this one, I think the jury is out. Well, the jury is not out. I think that's the phrase. I would also want to hear, I mean, what was the thinking behind this specific policy? And I would say, just for purposes of context, bad debt is at most times not a legitimate business expense. For it to be a legitimate business expense, there are certain things that you need to show the commissioner. Including that you can't recover this debt. So I think the policy incentive here is that the commissioner wants to, or rather the policy incentive here is that we are trying to make banks specifically to put more effort in trying to recover
debts as opposed to
those bad debts. And I guess this will also have an effect, as you're putting it, that I guess then accessing debt is going to be somewhat more difficult, because then the banks will have an incentive to try and make sure that we have the least amount of bad debts in the business, which will then mean that as at the point when they are assessing John, whether John is a good creditor or not, they have an incentive to make sure that John is, like, a very good creditor. Because if we give him money and he defaults on it,
basically we have no...
Yes.
All right, there's something you've mentioned, the digital service tax, and I think it's relevant for us to go into it for this simple reason. There has been a lot of misinformation around the digital service tax, especially because the policies have been consistently changing.
Yes.
So what do you think, from where you sit, we need to know about digital service tax? There has been a lot that has been discussed, but now this is the final draft from where we now go into the implementation stage. So tell us, from where you stand, are influencers supposed to be scared at this point? Should people who are selling thrift items online be worried? Tell us.
So I would say this. I would say with the new amendment under the Finance Act 2021, I would say we all have to wait, because I think from where I'm sitting, digital service tax has received a new facelift, quote unquote, for this reason. When we look at the amendment that came in last year, which I think for the first time introduced the digital service tax, it limited digital service tax to services that are offered in a digital marketplace. So now when you look at the new amendment, they have changed the wording from services to something that is neutral. And then when you look at the new definition of digital marketplace, they include spaces in the internet where goods and they say goods and other products are sold. And for me, I guess, then I would also want to pose a question maybe to Treasury again. I guess is what's the policy, incentive behind this, and where is the data? Where is the data on this one? But I would say digital service tax has not been a bad thing, quote unquote. And maybe one way to think about digital service tax is to rationalize the digital service tax under the Section 3 of the Income Tax Act, which is the rider provision for how all income taxes are supposed to be imposed in this country. And if I could take you guys back to Section 3, it tells us that all income that has been earned in this country
Needs to be, yes.
all income that has been either derived or accrued. So any income that has been, made in here or has been accumulated in this country needs to be taxed, whether you are a resident or not.
non-resident,
So the first thing we need to note about the digital service tax is that it was a way of actualizing Section 3. So Section 3 of the Act.
Yeah.
And I would say that one of the things that we need to appreciate about the digital service tax is that for the first time, Kenya is going to try and derive taxes from multinational companies. I mean, so most of you guys who've been following the conversation on digital service tax will tell you that now Netflix is paying a tax, or at least they did say they're paying a tax. I don't know whether
Whether or
KRA
not that
actually
has-
received money, but they did make a public statement that they're going to declare tax. And this is one of the ways of expanding the tax base, actually,
That does not necessarily fall back to ensuring that the common mwananchi has to dig deeper in their pockets to ensure
Yes,
that the tax
yes.
base
I mean,
taken.
this is one way of expanding, and that's what I'm saying, Stephanie. That I think the tax system in Kenya has come from has really traveled a lot, and there are a lot of things to commend about what Treasury has done, and importantly, what KRA is doing. I mean, and maybe
Don't you feel like one of the things that we also need to talk about as regards what KRA is doing is slapping a band-aid on everything with tax? A good example is perhaps in the chase for, of course, the inclusion of universal healthcare. Yeah?
Yes.
There has been the introduction of the tax
Yeah.
relief on guys who pay NHIFs.
Yes.
So the question is, do you not feel like KRA has this tendency to slap band-aids every other time on things?
Yeah.
Another good example, rural electrification or off-grid electrification
Yes.
and perhaps civil works
Yes.
has been given some rebate. When you
Yes.
look at, of course, companies that tend to employ
Yes.
people who are fresh out of campus, they have
Yes.
been given some allowance or some rebate such that they do not have to pay a certain amount of tax. So the question is, don't you think these are band-aids when you look at the underlying problems? For example, unemployment being addressed by giving tax rebates to companies that are going to employ people fresh out of not just technical universities, but also universities. When you look at the sort of benefits that accrue when you give tax rebates to, like, say, companies that go out of their way to do civil works, do you not feel like the government has a natural tendency to try and band-aid everything with tax? Or this is not working, let's just give them a tax. This is not, oh, let's just remove this tax.
Yeah.
So it gives an impression of a very haphazardly thought out idea of a tax regime.
Yes. So I'll take that question from your last comment. I would say, and this, I guess, is something I made a comment as we were beginning, that it seems also to me that the way taxation happens in this country is a bit too erratic. I mean, as you're putting it, today we have tax incentives, tomorrow we don't have tax incentives, and we really don't see the reasoning behind it. At least from where I'm sitting, I've not seen, actual documentation. And maybe I could be wrong, that maybe there is something out there I've not seen, but I haven't seen anything.
What are the chances?
Yes, and for me, this is one of the reasons why tax experts in this country are saying that, you know what, before we perhaps have a finance bill, let's first of all do a tax policy first.
Yes.
Let's first of all think through what kind of incentives do we want to pass. So that when, for example, John comes to Debate Circle, I hope I'll be invited again. When you ask me what's the policy consideration behind something, I will also say I will I guess be in a position to understand what's in the mind of Treasury
Yes.
when they're coming up with some of these things.
Now, help us understand what was in the mind of Treasury when we came to the idea of VAT. Yeah? And this is perhaps one of the things that is hotly contested, the removal and addition of certain things into the vatable and non-vatable list. Yeah?
Yeah.
So in talk about, of course, this was suspended by the High Court as at the last time, or rather it was the parliamentarians themselves that chose to decide to send this bill back.
Yeah.
So the idea that someone decided that let's take syringes out of the non-vatable list, let's take baby formula out of the non-vatable list, do you not feel like that is a reason or a cause for concern when you look at how the tax regime in this country works?
Yeah.
That someone can sit down today and decide that something as critical or as vital as baby formula should be taken off, the non-vatable list.
Yeah. I agree with you. I mean, that's the very nature, that's the erratic nature of how tax legislation is happening in this country. I remember a joke I had somewhere about somebody who was saying that we have begun taxing the children, making reference to the baby formula and sugar that is also now now being subjected to a new rate under the excise duty. And I think for me, that's also one of the reasons that we seriously need to put our minds to, why are we taxing the things, and why are we taxing them the way we are taxing them, And perhaps it would have been interesting to see if, to see the kind of data that is informing some of these policy changes. And I think for me, that's where I think I would say the biggest flaw is when it comes to this. We really have no data to inform why things are the way they are. And importantly, no effort has been put to explain this. So if you look at the tax bill itself, when you look at the memorandum of objectives, at the very end, I mean, you'll not see much effort being put to explain to us
why are we removing syringes, especially in the time of COVID, and now there's vaccines. Yeah. So why are we removing something as critical as syringes from a list of non-vertable items? And I think another thing that also needs to be addressed, especially from a legal standpoint, not just from a tax standpoint, is the oversight role of Parliament, especially in the wake of your CS coming to say that they want, or rather they're pushing for an amendment where Parliament no longer has oversight on the increment of VAT. Yeah. So basically that gives the Treasury the right to wake up today and decide, so VAT will be at 20% and nobody checks and balances that. Yeah. Do you feel like there's a problem therein when fundamental principles of democracy are violated by such policies?
Yeah, that's an interesting question. When this question was being debated, at least as a policy question, I think one of the arguments that was proffered for having the phrasing the way it is, that is removing the supervisory power of Parliament when it comes to VAT regulation, is that apparently VAT needs to remain dynamic. Dynamic in the sense that it needs to respond, to how things are changing. I don't particularly think that's a good argument. I think.
In fact, euphemism aside, that's a very poor argument.
Well, I would not say poor.
Considering the beginning elements considering the beginning element that you talked about in terms of how a tax regime should be, you have stability and you are in a position to predict harm. I feel like that is a very simplistic way to think about as one of the most indirect taxes, one of the taxes that affects the most Kenyans that go that today. We need a more dynamic approach to corruption, but we don't have it now, do we?
And then again, I agree with you. I don't understand that. And I think this is one of the interesting questions that perhaps, understanding the policy behind it. But going back to my trail of thought, I also agree with you. It's not particularly a very convincing argument, at least not to me. And I think it's a very dangerous trend. Yes. And the way of thinking about democracy as you're putting it, but also about tax legislation, and especially VAT legislation in this country. But then I guess also on the flip side, one would also want to ask on what kind of expertise does Parliament have in considering some of these things. But I want to agree with you that that's also something very dangerous, especially when it comes to VAT and the trends we've seen in VAT regulation, where you find that we have regulations that are supervening the act itself.
Yes.
So
there's no uniformity in laws.
Yes.
And there's a very interesting point that you've mentioned, the idea that perhaps do we have people who understand the concept of how things work in Parliament to the extent of putting out some of these things. That brings us to one of the biggest points of this entire debate. Now, the things that we have discussed, the complexities that we have discussed, breaking down the interest limitation rule and the thin capitalization, these are things that are critical for the understanding of whether or not this finance bill passes. Yeah? And that has been entrusted to politicians who are busy debating whether or not the basic qualification to be an MP should be a degree.
Yeah.
Do you feel like Parliament is in a space where we have the space to trust them to carry out some of this, or rather to pass votes or pass amendments on some of these discussions, heavyweight discussions like the ones we've had?
I would say this. I mean, I think one of the biggest benefits of having MPs do degrees, especially at the university level, is that I think it would have a good ripple effect at the grassroots. I mean, imagine if we compelled our MPs to do degrees, you know, what that would be like a very good thing, you know, for the person down there. Because, and importantly, I think it would also have the impact of perhaps increasing the quality of education in this country. Because then again, if I met Muheshimiwa,
well, that's arguable. Very many of them have gone through the system.
Law school.
Well, that's
I mean, he would, I mean, you can't discount that he would have an incentive in making the system work better. I mean, if we are going to subject him, for example, to a system that is failing, for example, you know.
Then we are hoping that out of that we might birth some motivation to sort of try.
Yeah, I
and
mean,
fix the system.
if I want to be a parliamentarian, or if I'm an aspiring parliamentarian, or if I'm, you know, somebody who has been condemned to go back to get a university degree, and I went to law school named X, or I don't know, university named X, and I didn't have my cut marks, don't you think that would increase, you know, my urge to make the system work better?
Well, that is very arguable considering the fact that the urge that they have increased is to still better. I'd like to hear from what my audience thinks about that particular idea. From the weight of the conversation you have just sat through, do you feel as if you entrust your politicians to actually make legislation and pass legislation as heavyweight as what we are discussing today? That we are trusting a politician today to understand what the interest limitation rule is and to rule wisely on that particular choice, that yes, this is something that the country needs, and yes, we can go ahead with this. Let me hear from you real quick, in a few sentences.
Perhaps in the interest of time, I will keep it short.
Yes.
There is a lot of contentious things around the technicalities of the budget and the finance bill. But my key takeaway is, as of tax policy, we lack none. And that's why you'll hear things like VAT should be dynamic. In my honest opinion, it doesn't have to be dynamic. If we boil down to what a good and key budget should have, is one, it should be a planning tool, an economic tool, a political tool, and a social one. In this country, the budget is just whoever the CS to the treasury is, that's his job.
Yeah.
It's no longer used as a cohesive tool between these policies. Even our politicians, you don't see them directly involved apart from when there are contentious issues that need to be passed in parliament. Because a budget is a political tool that the leader of the country uses to cement his policies for that regime. When it comes to a planning tool, does it serve for the greater purpose of the country or just for the economic class that is earning? If it comes to the economic facet of a budget, of a budget tool, is it should be at least able to prevent economic regression. And if anything in this country, whether we want to increase a tax base or not, policies should come first before we talk about let's get more money or let's tax this and tax that.
All right, so are you comfortable with the idea of trusting your parliamentarians arguing about degrees to make such heavyweight decisions at a personal
Definitely
level?
not. I mean, we have not even just parliamentarians, people in cabinet secretaries that are very redundant and simplistic in their reasoning should be the last people to decide what we should do with the tax of this country. But then falling that entirely to parliamentarians is also failing to recognize that as citizens, we have also become blind to our own issues because we vote for the same people in parliament, and then we sit and argue that we should let the learned take over, but we still vote for these people. So it's a check and balance.
That's a no. That's a very polite no. Very quickly, do you feel as if you trust your parliamentarians to make some of these decisions, the parliamentarians you put there?
Definitely not. No, absolutely not. And this is why, you know, we've talked about VAT a lot. And again, I'm going to refer to that. When you look at let's say the baby formula debate and such, and how, you know, goods that are vatable, exempted, and not, you know, which this, you could see there was a clear lack of comprehension by a lot of these parliamentarians. For example, I'll tell you something about the VAT. The VAT has not been functioning optimally. It's not functioning the way it should function. When the new VAT Act came, there were about 30 exempted goods. Now they're at around 110, 120. I don't know the precise number. But the government is making inroads into reducing these and then increasing once again. There is precedent. It happens in a way that, say, last year, for example, the number of exempted goods, so I'll start with the tax revenues, for example, the tax rates were reduced for people. So kawaida mwananchi will be like, this is good for the government, things will be better for me. But now when you look at the vatable goods, that list was increased. Sorry, that list was also altered with on the other direction. So it cancels out. And this is what a lot of people don't comprehend. They don't fathom. They think, the government will reduce my taxes, but VAT that affects everyone else will come and affect them, and they won't even know it. So it's like you are robbing from this
You're
side.
stealing from Peter to pay Paul.
Yeah, exactly, as the old saying goes. You're stealing from Peter to pay Paul.
Okay.
So that's the thing. And I also believe they should really look into manufacturing. When you raise an issue of manufacturing to government, they don't even take it seriously.
Well, that would be arguable, considering manufacturing is one of the big four agendas of
exactly, and exactly the big four agenda, exactly. So that is something that was brought about at the second term. Of course, affordable housing, and all that, universal healthcare, food and nutrition. So there was some emphasis on the big four agenda. I agree with you, Steph. Precisely, it was 153.5 billion shillings was allocated to the big four agenda, with a lot of emphasis on manufacturing. Now, the thing with manufacturing is that it accounts for around 7.5% GDP, and revenue collected by the government is 17.5%. So this is something that in 2, 3, 4 years, if hypothetically everything is done correctly, it could double, let's say, from 7.5 to 15. And the GDP in turn will also double to around 35. And reaching 50 and 70 is very, very simple. It will be very exponential. Because a country that relies a lot on service as we do, COVID was a real tester. We saw how the country fared.
Allow me to interrupt you at this point in the interest of time. Maybe perhaps as you wind up what you were saying.
I was saying
just
that.
30 seconds.
Oh, sorry. Yeah, I was saying that when you look at the big four agenda, by the way, came after pressure that in the first time we didn't do anything. So I think there should be a lot of emphasis. First of all, yes, we don't trust the parliamentarians. There should be serious standards. And also, yeah, it's true. And also the other thing is that you should elect them and push them to actually tackle the real issues, as was done by the VAT and, by the big four and everything. Things will be better. Thank you.
Thank you very much. Very quickly, what are your final sentiments? Do you trust your politician, your parliamentarian, your typical parliamentarian who's arguing about degrees, to understand the complexities of the kind of conversations you had?
Well, thank you. One thing that I remembered in the course of the conversation is the saying that there are only two sure things in this life: death and taxes. And I think, having said that, personally, I don't have a problem with my MPs not having a degree. That's why tax experts exist. Having said that, that's why you have, So I think there should be a qualification, but I don't think it should necessarily be a degree. And that's a debate for another thing.
It is.
The only thing that, maybe if I can highlight something I've noted, when we talk of minimum tax, we should also talk that there is actually an exemption for industries for manufacturing companies that are 10 billion, that have an investment of 10 billion and above in the bill. And now we should ask ourselves, what's the rationale of that when we have so many startups that are failing?
Yeah.
When we talk of budget, I'd recommend that next time we do talk about the role of the control of budget. I feel that we've not addressed, because I feel there has been a failure in that aspect. And now, as I finalize, my takeaway is this. It's just something has crossed my mind, if I can mention it. When he talked of Big Four, we also need to look at the public, the finance bill. and Big Four, you find that it's not matching. There's some things like housing, there's been the removal of the housing development levy and all. So there's also that mismatch of government policies. And as I finalize, I think the most important thing is we should move away from this BBI of building bridges initiative and come to a BBI of balanced budget initiative.
No, that's a very interesting one, a balanced your budget initiative. What are your final sentiments as we wind up this session on the tax regime in this country? You've insisted that yes, let's have a tax policy. What are your final sentiments?
So I would say this about the tax regime. I would say 3 key points. Number one, the tax regime in Kenya has really come from a lot, and that's not something we can. I think as a young professional, or at least a young professional who's trying to join this field, I don't think that's something we can take away from both the Treasury and KRA, what they have done over the past 10 years. But I would say, and I agree with the sentiments of our esteemed audience, that we need to do quite a lot more at the planning phase. And by planning here, this goes back to this idea of emphasizing. Let's have a policy, you know, and maybe a policy, we could call it another thing if policy is problematic, as I've seen. Some people find out that term problematic, but let's have a plan, you know. Let's understand, you know, what are our objectives and what kind of data is informing the things that we want to tax in the next fiscal year. And I feel like if we did this, number one, our tax regime here in Kenya is going to be to be somewhat predictable. And two, we will be in a better position to participate, you know. So for example, going back to this idea of manufacturing and Big Four, you'll notice that if you read the finance bill 2021, we have quite a lot of provisions that will ultimately benefit the manufacturers. We also have some that I think, from my perspective, I find hard to justify. And I think this goes back to what I'm saying. Let's plan. Let's understand what we want to tax, how we want to tax it, and why we are taxing it. I think if we do that, the tax regime here in Kenya is going to be much more robust, and fiscal planning in this country is going to receive a substantial upgrade.
So so currently you feel like there's a whole lot more work that needs to go into the tax regime? That's what we're getting?
What I'm getting at is a lot has been done, but a lot more could be done.
All right. So I'm just going to go through some of your comments online. Lalit Joba, wow, this is a very interesting name. I'd like you to teach me how to pronounce it. Such discussions are very important and useful for the general public and assist in enhancing taxation laws and related exchange of information. That's actually pretty critical, because what it does is that there's some movement of information, or there's some general public information about some of the things that are very, very important. Of course, there's Isaac Hiragu saying the government choice is between fiscal and monetary policy to influence the allocation of resources. We appreciate your sentiments. As we wind up, I'd like to ask you the same question I've asked everyone on this panel. Do you feel like you trust your parliamentarians to have conversations of the kind of magnitude and weight that we have had today? Are you comfortable leaving them to that? Of course, there's the idea that there's going to be the Johns, the tax experts and whatnot, but you believe that you're in good, safe hands whenever some of these things get to Parliament. I'd like to wind it up at that. Thank you so much for joining us on this particular session. If you have comments, questions that you'd like to pass on to us, by all means, do leave them in the comment section and we'd be happy to reply. But for today, that's it from us here at the Debate Circle. Thank you so much, John, for joining us. And thank you to the online audience for joining us. We shall most definitely see you the next time.